All right, let's start this again. All right, so finally the ES has broken out of the range. All right, very important because I've been waiting for this. I wanted to point out a very important key fact here. You don't want to look at a chart and kind of read the chart. If you were doing that with the ES, you got slaughtered because of the small ranges. You know, trying to buy pullbacks or breakouts, both failed. All right, and anyway, so you know, there's a couple of methods, and very important for traders to realize. What you want to do is get your levels first, understand the trend and the level and the pullback and all of that at important levels of strong supply and demand. Then when the price gets there, then start reading. All right, if you do not do that, you will be what they call fooled by randomness, or in this case, fooled by too many orders, because lower time frames are the dumping ground for higher time frames, and it is totally pointless to read. You're going to just screw yourself over. All right, so what I'm trying to say is anyone who was trading the ES knows what I'm talking about. They're destroyed, right? If they didn't wait for the pullback either here or trying to get this spring action here or here with these little moves, it really got hurt bad. And that's what happens in tight ranges. It's a really challenging time, especially when the tight ranges come after a big move and you think, oh yeah, it's a big move, we're gonna go, I'll buy the pullback, you get stopped out and all of that type of shit. So you want to always prepare your levels and market and in advance, and then read the chart with whatever methodology once it gets to those levels. And this is not my opinion, folks. For all the Wyckoff traders out there, this is what Wyckoff indicated in Division 2 of his course when he said where to find trades, and basically said that if the market is swinging between 30 and 35, you should look for buys at around 30 and sells around 35. I'm paraphrasing the exact thing that Wyckoff said. He didn't say, oh, you know, just take a look at the waves and just, you know, oh, I think it's a sell. No, that's not how you do it. Because your mind will play tricks on you. And also there's some mental capital issues that folks have to understand. It also has to do with probabilistic, if it's going to move just like it did before or not, and messes with your expectations. So this type of environment, and the trading environment is very different from real life environment, because it's not based on actual cause and effect. You are at the whim of other traders to continue the price up or down. So other traders have to buy at worse prices than you did in order for you to make money. You know, so remember all of these things, because this is not like, okay, you know, if I work really hard, I'll do good on an exam or this or that or anything like that. It's totally different. You don't have control of what other traders are going to do. As soon as you understand these psychological things, you understand that you better accept randomness in terms of probabilities. And what I mean by that is thinking in probabilities is thinking in possibilities, and you must prepare for all those possibilities. It looks good, but you don't know if it's going to work or not, even though it looks good. All right, so I mean, once you do that, once your mind gets trained, you know how to exit. You know, there's a lot of traders I explained how, you know, you think price is going to go to a particular level, but it doesn't. Right? It goes almost there, 80%, and the damn thing reverses. So you need to know how to scale out and all that shit. Okay, enough of the chant and the rant. But here's the point. Like I told everyone before I was looking at this brick, because I knew there was initial buying here. Okay, they were buying this brick. I said from the get-go, they're buying this brick. Why? It has too much volume. But I can't, you know, be Superman here. It got sprung and retest, and now it's going. So I really think that this was the accumulation right here, because of the biggest volume in 39 bricks. So I'm buying right at the support after the spring retest. All right, now it's going, and now it's going to set up and it's going to test that brick like in that area. As soon as they get there, it's going to set up the trade. So on ES, that right under the 4150 level, like right there, that's where this heavy buying came. So if they're still there, that's where it should react. All right, so just wait for it to come back. See if they're going to buy there. If they're going to buy there, join them. If there's no buying, then forget it. That's the way, that's the way you gotta do things, or one way to do things. I'm not going to just buy the pullback. I want to see evidence that they are buying, because when you think about trading, right, all of these methodologies, a lot of them lack common sense because they go into patterns when it's not about patterns. It's about discount, buying at discounted prices. How much of a discount are you will it take for strong hands to come in? That's all it is. When you're buying and selling, is the majority of it is nothing more than how much of a discount will it take. Okay, price goes from 30 to 35, right? Like Wyckoff had indicated in Division 2 course. Now we see, oh, okay, it's coming back to 30. Look at the discount. That $5 move, right? If it goes down to 31, that's an 80% discount off of that move. Okay, now are they buying an 80% discount? Right? This is what really trading is when you compare it to just like other things. You're just trying to see if you can get discounted prices, because the pullback is nothing more than a discount of a recent high-low. Right? If a recent range of prices from the low to the high is a range of a rally, then from when that rally occurs, you're seeing how much of a discount will it take for these guys to continue the buying, and maybe I can jump into that. Anyway, so that's what it really is about. The rest is being able to evaluate and quantify what's going on, about how strong the buying is, how strong the pressure is. If you really go towards that, it's much better for you, in my opinion. The more you relate it to buying and selling and reality, the better, because all of these methodologies are propagated. I've seen such dumb shit I cannot explain to you, where folks are looking at a candle pattern like, hey, 1, 2, 3, if these 3 candles do this and that, that's bullish. That's total nonsense. Anything that you ever buy on the planet, nobody uses that. They say, let me see the prices, historical prices, candle ABB look like that, it's bullish. That's so ridiculous, but that's what's being taught. Whereas what's really important in all other fields where there's buying and selling is identifying what price did this thing sell at, and what price did it sell at before. So always taking a look at price in relation to historical prices, and then putting a discount on it, and then judging, okay, is this a good deal or not? And for me, that really makes the most sense. Anyway, enough shit. So right now we know that these lows are the lowest prices, right? We could call it support, but these are the lows, and now it broke out. All right, so how much of a discount do you need for these guys to come in and rebuy? Look at how much buying they bought here at discounted prices. Okay, how much buying? All right, they're buying a lot of stuff around here, a lot of buying here, right? Okay, so when price goes back, I'm going to continue to buy, because the price, as it went up, they stopped buying. You see, here, there's no volume. So they're not buying. So where did they buy? They bought here. That right there is a good deal. Right? That's a good deal, especially when it establishes a high that is much higher than what they bought at, given the time frame. So when it comes back to that good deal, is it still a good deal for these guys to continue to buy? If it is, bingo, buy it. This is what makes sense, and this is reality. It's not some absurd kindergarten pattern and buying off of, I don't even know what to say. But it's really sad that what's being propagated, because 100%, if what's being propagated, it will 100, it will you will lose money. I mean, based on what I've said, what I've seen, and what I've read, it is the people are being taken advantage of, in my opinion. I think any rational person would not buy anything based on random patterns of candles or this or that, but instead would take a look at how much of a discount, what is the high, what is the low, are we near the low and getting a good deal, and are those buyers still there, and let's join. That's the importance, and this is why also support and resistance has worked for, I don't know, maybe almost 100 years. This is why it's still around. This is why it has weight, because support and resistance is just the lowest price and the highest price, the best prices to buy and sell. Right? Anyway, so right here we see this was the biggest volume in 3 bricks, 1, 2, 3. These bricks here were the effort. So this is the biggest 11 and 12. Heavy volume. Did not break and went the other way. Why? They were buying here, and they bought here. The initial buying right here, biggest volume in 39 bricks. Buying at support. When it came back to support, you sell, we buy. That's what they did. Bing, bing, but when they're done, break it out. Biggest volume in 3 bricks, taking out 1, 2, I guess 3, and no volume up here, so very likely it's going to come back. When it comes back, get the long. All right, now we will take a look at crude. All right, so this is also a little bit strange. I'm trying to figure out if this is a sell or not. This volume is so heavy. I don't know. This looks like effort now. With this lot of people sold, and the other side just bought it right up. So they're trapped orders here, no question about it. They have to get out. Someone here sold, and you know why they sold? They sold against this, I don't know what you call it, resistance or something. I'm not sure if it upthrust this, but let's see. The high here was 79.78. Excuse me, 78. 71.78, and look at this. The high here was 71.79, 1 penny higher. So this was a failed breakout, heavy selling off the breakout against that prior resistance. Sell. What happened? Continue to sell, and buy it all up and rally it. So there's a lot of trapped orders here. You could tell they're here. Now, when price comes back here, these guys, they need to cover. You have 2 edges. One is the sellers need to cover. Their short covering will protect, is an edge. The short covering is the buying, which will be an edge for the buyers. And second is new buyers who are looking to buy pullbacks here, right, in this area. So those 2 edges are definitely there. This was the biggest volume in 86 bricks. 86, and it took it out to the upside. Now here you had a sell zone. That's a distribution brick. Oh, there should be some sellers there. Push it back down into this accumulation area, and we'll look for the trade there. Gold totally broke these lows, but actually, it looks really bad up here on the Renko. But if you look at the daily, it's not really that bad, right? Do you see this being that bad? I mean, it rallied, 1 pullback, 2 pullback, took out these lows, and it didn't go any lower. So, I mean, if you wanted to get the people out of the market, this would be the exact area to run. This is where all the stops are. Why? They're against the rally low. The 2 places where stops are, they're either the pullback low or the rally low. Most likely, they run the pullback low with the spring, right? The ABC corrections of the spring. The down, up, down. This time they did the spring, couldn't rally, went all the way down here and screwed these guys over right here in these lows, where the 1981 area, right, the 1981 low, they broke it by 3. So it went from, took out the 1981 stops, but because it went to 1978. So here we want to see is they're going to bounce or not. From what I see, when it went to that low, again, I don't know if this is a breakout or buying, but this right here is the biggest volume in 100 bricks. So I will presume that this is a breakdown, right? I would presume that it's a breakdown until its high gets taken out. If its high gets taken out, then it may not be bearish because it's going the other way. So this is the biggest volume in 100 bricks, and yeah, so the supply area is up there that broke, right? And I'm not sure about this, but don't for a second think that, I know a lot of people saying, oh, gold breaking now and all of that, but is it broken? Do you see it broke, or you just see it test the low and go into spring position once and then spring of the rally twice? So that's what you got to be careful of. And it's very clear that it did not break the low. It sprung it with a little bar, and you know, we'll just see if they reaccumulate here, or it goes up and continues to break down. I don't know, but I'll know how to react. All right, so let's see this. All right, so bottom line. Right now, gold still a sell in that 2015 to 2020 area, 2015, 2020. Taking a look at this brick to figure out what the hell this is. And on pullbacks, crude probably will react and pulling back to that 71-ish area, that 71 area, looking for that 71 area. And for ES 4140. So 4140, ES longs looking there, longs 4140 looking for longs, 71 around 71 to 7150, like 71 7150s, let's say 71ish for longs on crude, also for a pullback on crude, which I think is going to happen, and gold around 2015 to 2020 for the sell, unless we get a strong rally, then my bias will be on the bullish side. All right, thank you all. Have a good evening. Bye-bye.